So let's bring on Fernando so I don't butcher his name anymore.
What's his last name?
Angelucci.
Okay.
Thanks for joining us, Fernando.
Here's a
Anything we can do to
little,
make you smile.
and I'm smiling every time I come on. So here's a little mnemonic remembering device here. So Angelucci in Italian means angel of light. So Angel Lucci.
Nice.
Makes it easier.
I'll still screw it up, but thanks for sharing. So our theme, and again, thank you for coming on. You're always a great guest. We get wonderful feedback every time you're on. We appreciate you coming on. Our theme this month is all about the numbers, and you do such a great job of breaking down what you're looking for when you're looking at self-storage value add. I know you wholesale a lot of these properties because you want properties that fit into your particular box. So kind of give us an idea of what you're looking for in that box and how you go about determining those numbers, if you don't mind.
Yeah, absolutely. So we have three main verticals that we utilize to make money. So the very first is the value add transactions, buying mom and pop facilities, typically in secondary and tertiary markets. What we look for in that vertical is 30,000 plus net rentable square feet with the ability to expand up to 60 to 65,000 square feet. If it's below that or if it's above that, then it's something for our wholesale list. So we'll send it out to our investors. And that works out really well because the primary investors on our list that receive deals from us are either just getting started in self-storage or on the completely opposite side. And they have, a couple million square feet and they're really looking for large acquisitions at that point. So that's the main vertical. All the way on the other side of the spectrum, we have our ground up developments. So the problem with trying to purchase facilities that are existing that are over 65,000 square feet is that you start competing with the REITs and the hedge funds and the private equity funds. And they have much lower cost of capital than we do. So they can typically drive the cap rate down, compress the cap rate down into the 4.5%, or 5% range. And I'm just not willing to buy properties at that type of unlevered return. For that type of return, I'd rather just put my money in the stock market and not have to do any work. So on the ground up side, what we're typically looking for is if we're going vertical, we're always going to be building Class A REIT grade facilities. So if we're going vertical, I'm going to need at least 4 to 5 acres. I'm typically going to be buying that acreage anywhere between $50,000 to $250,000 an acre. And that spread depends on how much work I have to do to the land. If the utilities are already there and it's flat and there's already a retention pond in place, I may be paying, closer to that $250,000 or even $300,000 an acre range. But if it's heavily wooded and I have to bring utilities from, all the way down by the public road and it's not flat, I'm going to have to bring dirt in or I'm going to have to shovel dirt out. Then you start creeping down closer to that $50,000 or $50,000 an acre. And it roughly translates to about $1 to $5 a foot if you're more used to buying in the per square foot range as opposed to per acre. Now, with the pandemic that has hit the country recently, a lot of the supplies that we use and the materials that we use were affected pretty negatively, and that includes steel prices. Mm-hmm. So with steel, we've seen a 300%, 400%, 500% increase in price depending on what type of steel we're buying. And because of that, we had to get creative and start pivoting our strategy to build these Class A REIT grade developments. So what we started doing was going after the big box retail space, which has been slowly dying for the last 20 years, but COVID really put kind of the nail in the coffin there. Mm-hmm. So we were able to start finding these big box retail stores. And by big box retail, what I typically mean is like Sears buildings, Circuit Cities, Kmart's, Walmart's, maybe some grocery stores. They're typically on Main and Main. They're surrounded by dense residential. Everyone has some good disposable income to be utilizing. And what I look for in those types of properties is anywhere between 50 to 150,000 square feet. And the reason why I have that large range is on The REIT grade side, our buyers are these large publicly traded companies, and they really only want to transact on facilities that are, 80 plus thousand square feet. With that being said, self-storage has an efficiency rate of anywhere between 75 to 85%. So what I mean by that is if I have a 100,000 square foot box, I'm going to lose about 20 to 25% of that square footage to hallways, mechanical closets, offices, bathrooms, things like that.
Sure.
So that's why we're looking for something that's around the 100,000, 150,000 square foot range. However, if that big box has a clear height or a roof height that is high enough, and what clear height means is measured to the bottom of the rafters. So literally clear, there's nothing impeding your ability to go up. If it has a clear height of 22 feet or better, I can typically mezzanine a level in there. So I can actually put two levels of storage inside of one building. And that allows me to start going after big box stores that are in the 40, 50, 60,000 square foot range, as opposed to reaching for those large facilities. So with that being said, what we've found is after the pandemic, we were able to start picking up these big box stores for pretty cheap, anywhere between $10 to $20 a foot. And that allows us to do two things. The first is it allows us to cut our construction time in half. So as opposed to spending 12 months to build a ground up development, we're allowed to compress that down to about 6 months because we already have the envelope in place. The second piece of that construction timeline is the fact that in some climates, we can't pour concrete because it's too cold, like in the Midwest or in the North. And sometimes we can't pour because it's too hot, like in the South, in Texas or Florida. Mm-hmm. So that also insulates us or weathers us in from the environment. The second piece is it also drops our total cost of construction or total project cost by anywhere between a third to a half. Wow. So typically I can build a ground up construction for $110 a square foot. When I go to the adaptive reuse or these conversion projects, my total project cost is typically in the $60 to $70 a square foot range, but I can still sell those at the same cap rates that I would those ground up developments.
Nice.